Okay, how are you guys doing today? It's a pleasure having you here. This is tagged what's happening in the Forex market. For a while now, we've been doing write-up on what's happening on a daily basis, but we decided to do a video version of it, and then hopefully it makes sense to you, and of course you can benefit from it. Sorry about my eye, it's a bit red. I don't know, something got in my eye, and I've been itching it ever since. Okay, great. So today is the 18th of July, 2022. As I said, we do this on a daily basis. So we'll be having more video updates on this. So now a quick disclaimer for you. The information you're going to get here is for educational purposes only, majorly. It should not be used as a form of signal for you to place trades. And then also note that this information you are getting, you still need to work on it. You still need to check the market yourself, as I said earlier. And then also, this market happens to be a leveraged one, so it carries a high level of risk, which simply means you need to know how to manage your risk appropriately, make sure that you minimize your losses, and of course, maximize your profit accordingly. So it's a pleasure having you all here. My name is Tolu Olatunji of CSA Forex. That is Common Sense Approach to Forex Trading. And what we're going to be doing is to give you information about the market from a common sense approach. Quickly, the greenback has been bullish for a while now. As we all know, the greenback happens to be the USD Index. So for this greenback, we're just going to quickly flip over to the charts and then see what we're talking about with respect to the greenback. And this is the greenback in front of us, which you can see has been bullish, but not even from this year. I believe this year was around this area here, around here. Let me just move there. Yes, around here when the market started to be bullish for the year. But if you look very well, it has been bullish since last year, 2021. And then if you look at your support and resistance, we're expecting the market that is for greenback, the USD Index, to pull back to this area of interest. And of course, we should have some more buying pressure here to take it back up and maybe even make new highs. It made new highs last week. I was about to say last year. It made new highs last week of about 109 marker. So this is what we have over here. And when it comes to the dollar index, it's very good, based on the majors and of course gold. I repeat, it's very good looking at the dollar index based on the majors and the gold to have a good enough idea of what's happening in the market. So after this greenback, gold happens to be at key area of flip zone. Now, first of all, a flip zone is an area that acts as support and resistance, and that is for gold. So this is gold over here. So when we say flip zone, this is what we mean by flip zone. It has acted as resistance in the past, and now seems to be acting as support, as we can see. Now, clearly, it's here acting as, well, a possible support, meaning that it should push higher. And if it should push higher, we have this area here of about 1780 that we could be looking for to sell opportunities to take it back down. And this is the weekly time frame if you look at this corner here. So if this works, meaning that this acts as a form of support, the next area of interest should be 1780. And then maybe another test of 1700 to break out. And if this happens to break out of this flip zone, it should now act as resistance to take further down. And who knows, right from here, it could easily just break down here without pulling back to 1780 area. But one thing about the market, one thing about price is that once it is stretched, just like a rubber band, it tends to do this snapback. And a snapback usually occurs where it is going to an area of reload, where it needs to reload again for short. So 1780 would be a good area for reload on the gold precious metal. And that is looking at it from the weekly time frame perspective. Now, after gold, inflation, yes, inflation is something that has been in the news for a very long period of time now. And of course, it is globally, it is not just to one area. And of course, the central banks have been trying to curb the rising inflation. Everything is up when you talk about the gas prices, when you talk about the food prices and so on. And of course, as things are up, Central banks are, hiking rates, trying to curb it. And we saw the Bank of Canada last week, they had 100 basis points. Wow, that is something. And of course, the Fed too will not be far off. I believe they were thinking of 75 basis points, but it might as well be 100 basis points BPS sooner than later. But let's see how that plays out. One thing I always say is that make sure you follow what's happening on your charts. Don't just use the fundamentals. The fundamentals is also a good gauge as to the directional bias as well. But everything is still on your charts at the end of the day. War in Ukraine, this has been ongoing since February, and I believe it's approaching 150 days now, which is over 4 months now, obviously. Since February, we had March, April, May, June, July. So it's about 5 months sooner than later. And that's, of course, it's also adding to what's happening in the Eurozone and other areas as well with respect to Russia and the gas supply, right? So, of course, that is a big negative in the market to deal with. And there have been talks of recession. Gradually, there have been talks of recession. So let's see how that goes as well. Once again, everything is on your chart. Pay attention to your chart. And of course, speaking of chart, Bitcoin and the rest of the cryptos have been crashing for a while now. That has not been hidden from anybody. It's been out there with the Lunas and the rest of them. But speaking of Bitcoin, where we hit 18K, this key area of untested. Yes, so the key area of untested support back then. And you can see now it seems to be reacting and pushing higher. But one thing I want to ask everybody is that look at this big bearish candle that broke out from this consolidation above here. You can see that after this consolidation above here, we had this big massive candle that got all the way to 18K. So my question now for you, and this question is also on the write-up that I said we do on a regular. So we're just doing a video version of this, just in case you prefer video and reading, rather to reading. The question now is, from this big bearish candle, from what we have here, are we going to take out this big bearish candle anytime soon? My answer is I doubt it. At least not from one candle that we have here. Today is the 18th, and this is what we've had after about half of the month. So we might just have some consolidation here, and then maybe it could even drop some more to probably test some. This low here, I'm laughing because this is about 4K, if I'm not mistaken, the 4K lows. People do not believe it could get to 18K now where they're struggling with it. I don't know whether you see 4K or 10K as well. Remember I said everything is on the chart. Big when it comes to technicals. Let me quickly show you something from the weekly time frame perspective, just to give you a better understanding. After breaking this 30K, which happened to be support, you can see the flip zone now. This should act as resistance if it gets there. So if it gets there, this would be a good area to look for shorts, to take it back down past the 18K, maybe to these areas here of you can see a thick area here of resistance support here. As you can see here, yes, we have some areas here, as you can see. So this is around, let's say, in between 4K to 10K marker here, and this is on the Bitcoin. Trust me, the bearish run is far from over on this crypto and the cryptos at large. But we always need to pay attention to our chart. You can see I keep on referring back to the chart because everything is there, right? So pay attention to the chart. It will give us a better understanding of what's happening in the market for any instrument whatsoever. Now, EURUSD parity. A lot of people have been talking about parity on the EURUSD, and I'm going to just flip over to EURUSD, and we're going to look at it from the monthly time frame, because the monthly time frame, the higher time frames, by the way, of course, they hold more water than the lower time frames. The lower time frames can easily be blown away by news or sentiments and so on. But when it comes to the higher time frames, as you can see on the monthly, look here, I love flip zones based on support and resistance. They help you to have a good enough understanding of what's happening at large. Support, some form of support here, support. Now it has broken this area of support, and it is fresh when it comes to resistance. So a retest here will be good to take it back down to where? Let me use my cross here, back down to about 0.95. 0.95, that means that we can still drop lower than parity. Yes, we can still drop lower than parity. And of course, this is a possibility on the charts again. So let the charts do the talking, understand the language of your charts, your price action, support and resistance. There's a language here. Once you can read and understand the language, then you are good to go. And then the advantage now is that you'll be able to position yourself accordingly. And this is what we have here based on the fiber, the EURUSD from the monthly time frame perspective. So now let's quickly round up crude oil and the dollar card. Just a quick one on the crude oil and dollar card. For a while now, the crude oil has been crashing. Now, where's the crude oil? Here's the crude oil. For a while now, crude oil has been crashing, and as it's been crashing, of course, we got to the highs of about what was that? That was about 120. Let me use my crosshair. That's about 122, $123 per barrel here on the crude. And then, of course, it's said to tank. And this was as a result of the war in Ukraine, by the way. It's said to tank inside this major range as we have boxed here. I said to tank, we have some key areas of supply. If we can get to this area here of about, I believe this should be around 105, 104, thereabouts. So if it gets here, look forward to selling opportunities to bring it back down. And then, of course, $83 is also a key area to watch as a form of resistance and support as well. Obviously, this might take a little while, maybe towards the end of the year or maybe to next year, also dependent on what's happening and how it develops more. That is the war in Ukraine, because obviously the war in Ukraine is having its negative effect on the crude at large. And speaking of the dollar card, the loonie seems to have hit a key area here of 38.2 from the weekly time frame perspective. Please, you could always watch this video again for better clarity, or you could always rewind. Hopefully, I'm not too fast. But if you look over here on the big picture, the weekly time frame, from this area here, I'll just mark this area here, as you can see, is always an area and not a price point. So in this area here, you can clearly see some form of like support, resistance, support. This is the flip zone that we keep on talking about. And then we have support, and this flip zone is based on support and resistance. Now we have resistance, and resistance. And we had this big weak puncture, this 38.2 and this area of flip zone, but it is still respecting it. And then we have what? We have this wedge. We have this rising wedge over here after a major drop over here. So that means that we should be expecting, right? We should be expecting this loonie to hopefully drop further back to this lower trend lines and maybe breakouts used as a form of resistance and then drop back down here. Who knows? Or if it breaks out, the next area to look out for is the 50, which also coincides with this area of flip zone, right? So this is just for you to have, you can mark this out, you can mark all these drawings out on your own chart as well, duplicate them, and then watch how price reacts to them. And don't forget, this is what's happening in the Forex market today, 18th of July. Tomorrow, we might probably do something from a lower time frame perspective, trying to look for trade opportunities to take in the market, right? So I'm gradually rounding up now. I know this has been a bit lengthy, but let's just round up now. And of course, I want to say thank you to everybody for staying tuned this long. We have the write-up that we've been doing on a daily basis for a few months or maybe even a few years, a few years from now. But we just started this series on what's happening in the Forex market. And from here, we'll be diving and looking at trading opportunities on a daily basis. We're going to make it as interactive as possible. We'll be looking at different instruments in the market, different things happening around us. Of course, COVID is not here. COVID is still very much out there. So tomorrow we might talk about COVID if there's any updates on it. Maybe from China or from anywhere in the world, what's happening, whether it's trying to increase here or there in this region or that region as well. So with that said, I want to say thank you for staying tuned. Sorry, it's a bit lengthy. Thank you for staying tuned. And of course, you can ask questions in the comment section below. I'll drop some links if you want to learn how to trade. We have a free training. We have a low ticket course. And if you're interested in one-on-one training, we have a book a call Calendly that you can click on and book a call. I have some calls scheduled today and tomorrow. So you can also join those on the calls for a strategy session. It's free. You can reach out and let's have a discussion on the markets and where you are and of course how to help you out. And yes, you can subscribe to the channel, help me to grow. And we will do this. The more subs that we have, it will give us the much needed fuel to do more videos on a daily basis. It could even be more than one video. All we have to do is just to click on record and then put this up on YouTube and other channels as well. So obviously we could be going live anytime as well, just to talk about the market, how we can take advantage. So thank you guys for joining us. It's indeed been a pleasure. Enjoy the rest of the day. Goodbye and God bless. Cheers.